The stock is just fine. The company's just fine. Now what you say, my friend?
Now I say it's still undervalued, and a meaningful overhang has been taken out of the name. You never know what's going to happen with these things. The judge can go any way they want to. But the idea that we would be talking in May, as you referred to, Scott, about competition eating Google's lunch, and at the same time that this judge would rule that there's a monopolistic practice here at Google, well, that was the ruling, but that the punishment would be draconian to reflect that monopoly, that was completely incongruous. You can't hold those two thoughts together. So although it was not a fait accompli, I'm very delighted. This is the news I expected. And now the overhang's gone. And what you've got is a stock that's trading at the low 20s. I think it's about 22 times forward earnings. You compare that to the rest of the Mag 7. And like the rest of the Mag 7, this is going to be an AI beneficiary. Yes, there is competition, but this is Google, a multi-trillion-dollar company that has been at AI for a long, long time. People don't remember that, but it's been at this for decades, and they have a viable product. That's showing up, by the way, in their quarterly results, which I expect will again be the case in the quarter to come.
You catch a fair amount of grief from the bench, and now you get some love. Because, I mean, you told people to just chill, relax, don't make such a huge deal of the Eddie Q thing, even though it's not like it's an insignificant point that he was making. It's just the stock's up a lot, and this is a big deal. 9 target hikes at least that we could find today. What do you think about this? I like Jimmy declared this, even with the gain, still undervalued. Well, if you look at mega cap valuations, it certainly has a lower forward PE than the others. Did we make that up? Let's show it if we have that. Because Amazon's like at 32 plus times, as is Microsoft. Alphabet's at 21.3 times. Maybe it's a little more now because of the gain that you're getting in the stock today, but nonetheless, does this start to close? Does this closure, if you consider it that, close the gap from a valuation standpoint between Alphabet and some of these other names?
Jimmy nailed it. Yeah, this is removing a significant obstacle, and I agree with you. I believe there's further upside potential here. When you look at the sum of the parts, you look at the various businesses and the valuation here, one can think about this company trading with a market cap exceeding $3 trillion very easily. Just thinking about the combination of a very powerful Waymo business, YouTube TV, the cloud business we know is doing well. And when you think about the valuation of OpenAI, how that has grown so dramatically to over $500 billion, what does that mean now for the valuation of Gemini and for Google Cloud itself? So it lifts the obstacle. It absolutely is a clearing event. And I also think it benefits the entirety of the AI halo because it gives now Google the opportunity to go out and actually spend more. Google doesn't have to sit back and concern itself with these antitrust fights.
I'll tell you what, this is an antitrust issue, quite obviously. It doesn't eliminate the broader question, like the one that Eddie Q raised in the courtroom, of whether these large language models and these co-pilots and generative AI deals are going to cut into the monopoly that they all but had in search. This does nothing to address that, does it?
That's fair, but it does allow them the opportunity for a very cash-rich company to go out and actually spend and defend against that loss of market share that potentially is coming. So
you're pointing out something very important. This is a huge company. The huge companies in any industries win by virtue of their size, by virtue of the resources, whether it's financial, as you're pointing out, or as intellectual, as I was pointing out before. I think this is very important. This is why I was so calm on the Eddie Q comments. It's a $2 trillion company. Now, I was surprised that it became a battleground stock. This was one of the more calm moments that I've had when defending a stock because of the size, which you're speaking to, Joe.
Yeah. Well, you own it too, obviously. Do you think it's a value? You start to close the valuation gap now?
I think you can close it somewhat more, but I don't think you'll close it completely. This stock is always sold at a discount, or generally. I don't want to say always, because that's just too strong a term. But it's generally sold at a discount over the last 5-10 years to some of the others, including Amazon. But here's what it also does, which I'm not aware that most are talking about. Gmail, Google Mail, is the dominant player in mail in the U.S., in email. Without the microscope on them for anti-competitive activity, they can do what Netflix has been doing. Now, they've raised prices somewhat, but they can raise prices more now without the glare of antitrust proceedings on them. So I think there are multiple levers they can pull to drive revenue, to drive earnings, and I'd look forward to them doing that. But I've thought about this quite a bit, is that how much of that headwind from the antitrust proceeding was still in play. I mean, the stocks recovered from 165 to 200 before this. So you got to believe some of it was discounted. Now, when it was at 165, everybody
crushed. Look at the move in the stock today. It would say that
no, I'd say some of it has been discounted.
The market maybe didn't expect this outcome.
No, clearly it didn't. Clearly didn't. But you still have the headwind of search share and of giving up some of their data.
I know, but the whole point is that maybe all of that was overblown.
No, and I think it was by today, but what I'm saying is that's the reason why it won't recover, or it won't go to the extent on a multiple basis that you see Meta and Amazon and others at. So that's my point. You'll continue to see it move up. And I think the headwind of losing position in search is overstated, because they'll still be the one to dominate advertising just because of their share they'll have. So I like it. I'm staying there. I debate about buying some more when the announcement hit, but I choose to wait for it to pull back a little bit because I think that's what will happen.
Liz, I'll make this quick. Meta is, you mentioned it, it's the direct comparable here in terms of what the stock does next. 2 years ago, Meta was trading at a high teens forward multiple. Many people, and I think it was you, Steve, it wasn't me, bought the stock at that point in time and have enjoyed both a multiple expansion and earnings growth. And that's exactly what I think you're going to see with Google over the next year to 2 years.
Aren't you talking about, you're talking about a stock move, but you're talking about apples and oranges in terms of issues.
You're correct. You're correct. I'm talking about a stock move in terms of what to expect. You're absolutely. There are some similarities. I mean, Steve was just bringing up email. Well, let me extend this, because Steve was just bringing up email. It's only one piston in the engine. There is YouTube, which I would say is a direct comparable to what's going on at Facebook. But yes, Scott, there was the year of building out the metaverse, followed by the year of efficiency. I'll grant you. I'm simply saying, from a stock point of view, absolutely Meta is the comparable in my mind.
So Liz, you look at this trade lately, which has been somewhat in question as you head into a new month. This is just what the doctor ordered. If you can remove some sort of regulatory and antitrust overhang over the space, what's that do?
I mean, it certainly helps. It removes one of the skepticisms that people might have had about current valuation levels. I think we're talking about some idiosyncratic issues with one stock, though. But when you look at the trade itself, if we're just talking about mega cap tech, or even if we're just talking about semiconductors and everything that has been under pressure over the last, call it 5 trading days or so, you can't remove the fact that what's happening in the rest of the market, especially with yields, is probably pressuring them as well. And I talk about the relationship between assets a lot. This is a relationship that I think right now is intact. You've got long-term yields rising and long-duration stocks under pressure. That makes sense. This could be a period of time where we're just sort of normalizing to a level of yields that needs to be more rational given the environment, a level of inflation that's perhaps digested by the economy so far, in which case then you look at long-term stock valuations, they didn't make a whole lot of sense. Investors were wrapping themselves into pretzels trying to make a case for why it was a buy at these levels. So some of these shakeouts I think are pretty healthy.